Home ownership is a goal for many people. After the dot-com boom, the real estate bubble really began to expand. Subprime mortgages fueled the creation of all sorts of fraudulent derivatives, spawning ridiculous new creations by PhDs far removed from reality. Once the housing bubble rightfully came crashing down, the financial system began to unravel. In came the Fed to save the day. Today, we have the exact same issues, but even worse. More derivatives, bigger banks, less oversight, and ultimately more corruption. The new real estate bubbles will pop. The question is, when? You came here for the truth, so let me unveil that for you. Let's go through this today. We're going to talk about real estate, and we're going to interconnect that with the global economy. Beginning with this will upset a lot of people, and that's okay. I'm sure they can handle it. We're looking at a chart of the real estate prices in Vancouver from January 1977 up until 2016. And you can see this pattern especially recently, where it has gone essentially parabolic at this time. It's a straight line upward right now at this time. That to me is a bubble. What else can you call it when something goes straight up in the air? And at this point, there is no reason for that anymore. It's gone so far beyond reason at this time. If you compare that, we're looking at the blue line, which is detached homes, and you compare that to, let's call it the attached or the apartment ones, which are definitely very expensive. But comparatively, you're seeing this gap that has really expanded over the past few years, particularly since the financial crisis. It has become beyond a commodity and become a gamble. And that's the way I see it. Yes, there is value in real estate, absolutely, but there gets to be a point where it becomes ridiculous. In fact, one home recently sold, and you might have seen this article, sold for over $700,000 over the asking price. That's a bubble, as far as I'm concerned. Why is this the case? When you have so much foreign investment, obviously you're going to have this influx of money. What happened during the Asian crisis? Lots of hot money came in and really destroyed the value of these economies. Destroyed it because of that hot money. Everyone thinks it's good. Great, buy up the houses, buy up all the assets, buy it. Use all your money, spend it here, spend it here. It's not necessarily a good thing. You have to remember that. Yes, real estate tends to be quite stable. It's generally a good thing that people are buying more real estate. But look at what happened in the US, where we had millions of extra and empty homes. That's not a good thing. So that's, really cause for concern at this time. The reason why people are buying real estate at the rate that they are, let's just come to this conclusion, okay? Interest rates are rock bottom. It doesn't make sense to put your money in the bank when you're not going to get any interest. You're going to put it into a guaranteed sort of return, whatever you want to call those, let's say GICs, low percentages, almost 0%. Then you have other debt instruments that are giving you negative interest rates. These aren't popular. These are not going to go over well. So what do people do, particularly the foreign investors? They put their money into real estate. The interest rates are cheap and they can basically park their money for long periods of time. That's what's going on. Let's just admit it. Aussie building approvals year over year. So we had quite a boom in Australia as well. And what we have here now is a little concerning because the building approval is going to a 4-year low at this time after being quite high over the past 2 years, recovering. And it seems like things have been changing just since these past few years. And you can see going back into that territory. What I would say about Australia, my friends in Australia, generally the pattern for Australia is heavily tied into what we see in Asia. So pay attention to countries like China to see what's going to happen in Australia. That's one key indicator that I generally look at. I look at them in sync together, though they're not necessarily just tied, but obviously as trading partners, they do like to be bonded together. In my book, I have an entire chapter, in fact, about real estate. Don't fall for the no money down, zero interest rates, don't pay until the year 2035 sale, among other ridiculous methods. The recent housing crash gave enough proof that it is far too risky and it's not an investment, it's gambling. That's what happened only a few years ago, yet it's happening once again. I believe it's Fannie Mae who's giving 3% down mortgages. What are they trying to accomplish? We have a boom that has happened. It's gone beyond the boom and became a bubble. We need to let it sit down for a little while and relax while real investment comes in. We don't need the hot money anymore. We need this economy to get back to stable conditions. We need employment to get back to a solid level. We don't need housing prices to increase. We need things to be restored. We don't need any more bubbles at this time, but that's just the way it works. One bubble after another. That's why I say don't play around in these type of markets right now. Pay down your debt. Get out of their system entirely. It's too risky. Every single category is too risky at this time. Does that mean you shouldn't buy real estate if you have the chance? No, that's not what I'm saying. But don't buy real estate because you're jumping on a bandwagon thinking that the house is going to double over these next few years. That's where the risk comes in. Let's move on very quickly. As you look at China changing their yuan fix recently, and they have been all over the board with this. I just wanted to bring that to you. It's interesting to say the least, the way that they're manipulating their currency. Many people aren't sure exactly where they're going to go with this. There's small fluctuations. This is my point, that all in all, there's small fluctuations, but we need to see the trend. And we've seen it, let's say, over the past decade or two. The trend is clear, but recently they've been quite active. Since the financial crisis, they sort of kept it steady. But more recently, they've been playing around with that. So let's keep an eye on it. Significant stress. As you look at the Cleveland Fed Financial Stress Index, once again, entering what they would call significant stress. And that is a problem. You have to see the way that when they entered into, for example, QE1 in the beginning of the chart there, the stress comes down. The market is relieved that somebody's buying something. And then Operation Twist, and then we get into, QE3 and everything. And the market doesn't feel that stress anymore because the Fed is willing to be the lender of last resort. But clearly, that stress has been acting up yet again. That's not just the Cleveland stress. It's coming from the actual individuals, the corporations, businesses, and everything else down the line. Let's move into this. As you look at the correlation of cross-asset volatility increasing. You don't need to know all the details of it. Just look at the chart over here. Look at the lines. Look at where they're obviously tracing. Every time there's a crisis, these charts go up in that direction. It's pretty straightforward. It's simple. So let's just look at the question mark at the far right side. Where do you think it's going to go? Well, it's not going to be any good news coming out of this. That's the important thing. But you show a chart to somebody who's heavily invested inside of the stock market. Maybe it's their pension fund. Maybe they have something to lose. They see this chart and they say, look, nothing's going to happen. Everything is just fine. Don't worry about it. And even if you convince them that this isn't pretty, that what's happening right now, the indicators are piling up, they say the Federal Reserve will always be there to print money. That's the kind of arguments I have to deal with every day of my life. Last but not least, just wanted to bring this to you. It's totally unrelated, but I found it interesting. The major players in the global arms market, top arms exporters and importers. Look at this. United States by far being one of the major exporters of arms, Russia in second place there. Then you look at India, heavily importing. Just interesting to note, wanted to bring that to you. Weapons are obviously still very important to the economies around the world. This is where they make money. Dropping bombs on countries is simply a money-making scheme, and they're continuing to do it. It's not slowing down at all. They claim that they're slowing down the whole nuclear arms race. Not happening at all. That's a complete lie. So that's all for today. If you found this video informative, please give me a thumbs up. I wanted to say that for the video on answering your questions, I promise I'm getting to them. I was just waiting to make sure that all of the questions are in, because some people don't see the video for a week or what have you. So I just wanted to just wait a little bit and try to get as many of the questions in as possible, because then I'm not going to create another video down the line. I may have to split the video up into a couple parts, but you'll see. So you may just end abruptly or something, and then a part 2 will have to continue after that. So please look forward to that. I do appreciate every single one of your questions. There was well over 100 on there, so I have a lot to answer, but I'm really happy that people are interested in asking me the questions. I'll try to do my best to answer them. If you found this video informative, I know you'll find my book, The Money GPS, even more informative. If you want to look through the book, just head over to Amazon and you can flip through the pages of the book for yourself. Take care.